Hello everybody and welcome to another version of Hawk's Scan Sentry Report. I am Hawk Arps, Vice President of Jan Arps Traders Toolbox, and this is the Scan Sentry Report for June 13th, 2013. Well, let's see what kind of markets the charts have to show us today. Taking a quick look at the sectors relative to the SPY on our Scan Sentry toolkit, particularly focusing here on the TTB triple trender radar 3 scanner, and I have the radar 1 indicator applied twice, and I decided to apply it the second time because I can use bounded, and that way it normalizes all of the calculations across the different values for the different custom symbols. So I have actual radar 1 values and normalized values because I use bounded. So looking at these sectors, I see it appears that the Dow is the strongest of the three, but if you look at the triple trender, as you look at the radar 3, you can see it actually is the weakest, at least as far as the recent trends have been concerned. The score is higher only because the short-term trender just flipped positive on this bar. Here, looking at the different sectors, it looks like we're still strong in the financial sector and the retail sector. Looking at some of the other ETFs, you can see oil is relatively weak relative to the SPY still. Gold is relatively weak but strengthening, as is oil. And junk bonds, copper, all this weak. Short-term treasury bonds are strengthening. In fact, they're showing a good trend in radar 3 and a strong reading in radar 1. And longer-term treasury bonds, pretty weak. Looking at the regional ETFs, all the different countries, etc., I'm startled to see here that Germany is really the only strong market relative to the SPY out there right now, especially considering that they're enduring all these floods and such in Germany. That I find that pretty interesting. Here's a chart of our synthetic symbol. You can see this is the German ETF against the SPY, and it looks like it is strengthening relative to the SPY. It looks like maybe some money flowing into that. If we look at EWG by itself, not relative to the SPY, we can see that it's actually just moving sideways while the spider is moving down. Taking a look at the S&P futures contract daily chart here, we see that here on May 22nd we got a trend exhaustion 2 signal, giving us pretty good warning that this rally had extended itself to the point of exhaustion. Since that point, now we've got the price making lower lows and lower highs, and in fact all three trenders have turned bearish, and the radar 3 trend strength down here is bearish. In fact, we also have a nice pullback into the short-term trender and then a move back to the bearish side, which is a pretty good entry opportunity to the downside. That happened, I believe, on Monday or Friday. That pullback was Monday. And so we've had a good downside opportunity this week. I'm not sure this is a complete reversal yet. If I were looking for a reversal, I would look for a little bit more selling in the fear-greed indicator. But as you can see, if we get the fear-greed indicator below, let's say, negative 26, then we're going to be more convinced that this is a reversal. You can see I set my alert level there to negative 26. By then, of course, the price will have moved, but then if you're looking for another entry opportunity, you can find a pullback. Drilling down to this 50,000 share chart, we can see that when we got up here near the high end of this rally, there were pivot divergences that got our attention.
Too late to cancel.
Weaker buying here at the top, which led to stronger selling. And here's a flag that didn't follow through. We've got another flag that has recently formed, and just at a pullback to the breakout price, we got a nice trend divergence from our auto divergence finder. We did get a trend exhaustion 3 here at this recent low, so we're going to look out, but I'm seeing more selling than buying still. Some pretty strong selling here. Radar 3 is still very bearish, and we have a flag target at 1592 to the downside. Of course, we have to get through these resistance levels at 1600, 1598. Taking a look at the crude oil market, since the highs that were made in early to mid-January, you can see we have been making consecutively lower lows and even slightly lower highs since that time. In fact, over the last month or two, we've been testing lower highs on each thrust. In fact, currently we're up against the resistance of those lower highs, as you can see from this downtrend line from the automatic trend line signal indicator. So although the trend index is bullish and the triple trender is bullish, I would say that there is still quite a bit of resistance at this price level. So the path of least resistance might be standing aside or perhaps looking for a short opportunity. Now, let's see what the nearer term chart shows us. We had a nice rally coming up here to this resistance level at 96.39. You can see we tested that resistance level a couple times and failed. And on the last couple of thrusts, you can see there was weaker buying, which is why we didn't get through that price level. So price has retreated from that level, and now we are showing weakness in the uptrend on the Radar 3 trend strength. We're showing deceleration in the Radar 2 price leader. As I mentioned, we had a little sell divergence here in the Radar 1 fear greed, and the triple trender is split between the two trenders. So for my money, I'm looking for a move to the downside, maybe not a long-term move, but at least a bounce off of this resistance level for the next short while. Let's take a look at the gold market for a minute. What we were looking for previously at the last Scan Sentry report was a new test of these lows from the precipitous drop of mid-April, and it looks like we just about tested these lows on the 11th of June. Didn't quite get to 1361.90, but it got to 1364.50. So it could still test these lows, but I am seeing a lot less selling now than I have at previous points, previous times at this price point. So everything is still bearish in terms of the trender. The trend strength is weak bearish, but our Radar 2 is giving us bullish divergences as well. So although we're still likely to keep moving in this trading zone between 1350 and 1430, let's say, we could see this move up to the trender and even as high as 1474. Let's look at a nearer term chart, see if there's any clues there. Aha! Look at this. See, as the price was dropping here throughout the day, from this morning we had a lot of selling, and then through this week, the selling got weaker and weaker with successive lows. So we had a nice bullish divergence here. By this point you can see the buyers have stepped in, and the Radar 3 and the trender were both agreeing by 754, and price has been rising. In fact, we got up here to this support resistance level of 1384, 1388. We tested that level, and we're still on the high side of that level with a lot of buying in the Radar 1 fear greed here. So I am looking for gold to move up in the next day or two. I want to thank you for taking the time to watch this short video from Jan Arps Trader's Toolbox. And I want to remind you that all of the examples provided today are for purely educational purposes. Jan Arps Trader's Toolbox is not recommending that you buy nor sell anything. In fact, trading equities, forex currencies, futures, all of these can be very hazardous to your account. We're not licensed to recommend that you buy anything, but we are licensed to make some great technical analysis tools. So may the trend be with you.